Hey traders, hope you all having an awesome weekend. So a weekend update here on nat gas, gold, silver and crude oil, starting with natural gas. But as usual, over the weekend, I want to give you something valuable and educational for you to learn so that it will help you in your trading to take efficient trading decisions. So what a week it was for natural gas. I know most of you like to trade natural gas, and this is something I'm going to talk about in this video much because we do not have many zones to talk about this week as most of the zones did not play out or did not reach to the levels from where we were looking for the counter trades. But in this video, I'm going to show you how the price action works from the area of value, and I got lots of messages from traders that the price is falling down like a waterfall and what to expect if the price keep on falling down. Now, the only thing I try to teach you in every single video, and the reason I'll upload video every single day, so that you guys don't rely on signals and you can able to take your own trading decisions. Now, before I continue, let me inform you that I'm in Dubai for next 8 days and I might not have internet if I don't reply your text or if I don't reply your messages. You know that I have no internet, but I'm trying to sort my SIM. I'm going to get a SIM and a data so that I can respond to texts as prompt as possible. So most of you, if you follow me from a couple of years, you know that when the price hit my area of value, we mostly look for the counter trades, right? And that is why we have these zones. Now, some of the zones are the minor zones and some of the zones are the major zones. At this point, the price is at a good level. The way I rank my zones, it is not an excellent level, but it is a good level. Now, from these levels, when the price reaches, we can expect some bounce that is enough to hit your targets. And then if the price wants to continue to push higher, it needs to break above 50 EMA. Once the price breaks above 50 EMA, only then we'll start to look for the reversals. But if the price hit the area of value, the way price action works in a downtrend, we hit the zone and then we get a bounce, we exit, and then we ride along with the trend to the next level of support. Now, I got lots and lots of messages last week when the price was pushing lower like a waterfall. Thing I don't understand, why would you enter the trade when you see no conditions? Now, I've said that, and I've also mentioned and sent a message on my Telegram channel that please be patient and wait till the price forms a reason to enter. Now, when the price was here, we had no reason here, and we had no reason. The price broke below the moment of panic and then the price pushed back up in the zone. So if you follow me, I want to see complete break of the zone with at least 2 red candles to call the zone that is recently broken as my trend continuation zone bearish. But if the price comes back up, in that case, that zone is still valid. Now, we had an invalid entry pattern on Capital.com and on Nemex, which I'm going to talk about and what to do in that scenario. At this point, this week, we took on 5th of this month, we took one bearish trade, which is right here. The price was already pushing lower and trading lower, and we did not get scared and to sell trade because most of the beginners, what they look at, the price is falling like crazy and they start buying without any reason. But they don't realize that price is still in a downtrend and all we need to do is ride along with the trend or with the conditions only. And right here we had a condition of swing high bearish engulfing pattern. Right here we took this trade on 5th of February. Along with that, we took 2 other trades. I want to show you the losing trades as well so that you know the reality of trading. We don't have winning trades all the time, but so far this year, since January, we are up more than 80%, and I'm going to show you the trade results in my next weekend's video. Right, so this was another trade alert I've sent to the members. Now, did you notice one thing? The price is trading lower in a downtrend, similar as natural gas, right? If you see here, we are trading lower in a downtrend, right? And we had a bearish engulfing pattern right here. And exactly the same as natural gas. We are trading lower in a downtrend and then price made a new low. We had a pullback. We had a bearish engulfing pattern right here. Now, at this point, I still go for a sell trade. And the reason is because we are trading lower in a downtrend, and that is why we had all the condition met, and when the conditions are met, nothing stopped me to enter my trade. Doesn't matter if it's hit my stop loss. Now imagine after hitting my stop loss, if you have no stop loss there, then that would be a lots of loss for you. That is why very important to keep a stop loss and take profit. And if you blow up your account right here, you won't be able to take a next trade that could have been a winning trade. And the next trade I've sent in the group is GBP CHF right here. The next one we had, the price is trading up in an uptrend. We are above 50 EMA. We had a bullish engulfer, and then the price pushed up. It might have hit your take profit with a spread or might not, but one of a good trade we took in the priority group. 1 nat gas and 2 forex trades. So the reason I'm showing you this, because every time I enter the trade and every time I come online, upload a video so that you guys look at the conditions and don't get panic just by seeing the price is pushing lower, and with the greed you start going opposite of the trend. Never fight with the trend, always ride along with the trend. So, and one more pair I've shown you in my last weekend's video, and that time this trade was still running, and as you can see, 168 pips take profit has been hit. That's good amount of take profit and a good money in your bank. But we entered with a condition, not blindly, and we were prepared from the report I've sent to the members right here. From GBP CHF, the price was somewhere here, and with the pullback we wanted to enter with conditions, and we had a condition right here with a bullish engulfing pattern, a swing low pattern. We entered this trade, a good take profit has been hit. That is how we take over trades, with condition. Without conditions, we are just wasting our hard-earned money. That's a little lecture for you. I know it's not a big one as I do normally, but I still need to settle down here in Dubai so that I can able to upload my regular videos from tomorrow. So for now, I'm going to start our analysis right away with natural gas, gold, silver, and crude oil. So let me show you first. We here on capital.com, price has now hit the level of support. Not a very big level, but a level from where the price has reacted nicely. Now, at this point, some of you might have wondered that we had a valid entry condition, but if you look at this bullish candle, it is not an engulfing candle. For the candle to be an engulfing candle, it must fully engulf the previous candle, but including the whole body from bottom till top. And in this case, the green candle, it did not engulf the previous candle. That makes it an invalid entry pattern. But we have an entry pattern that is valid here on Ovanda. If you see here, the body fully engulfs the previous red candle, makes it a valid bullish engulfing candle. Here on NEMEX, exactly the same. The price pushed lower, the body opened above, and that makes it an invalid aggressive or bullish engulfing entry. So what to expect from here? So at this point, first on Ovanda, we had a price pushed lower. Yes, we had broken below the zone, but I want to see a complete 2 candles close below the zone to make it a valid trend continuation zone bearish that will push the price lower. Now looking at this level, not an excellent level. I'm not expecting a full reversal, but I'm still looking at the zone below, which is right here, 1.476, that goes to 1.645. I know the zone is quite far, but this is a zone that from where we can get a potential reversal, because it is a very big level. But for that, the price needs to be broken below in a good momentum and keep on falling down. But we have a possibility that price can fall at this level if it won't hold at this area. Now looking at a bullish engulfing pattern, we can get a push up and we can get a bounce from here. That bounce can be till 20 EMA. And if broken above 20 EMA and closed above 20 EMA, it can still hit 50 EMA. If it rejects at 50 EMA and forms a bearish engulfers, we can get a possible formation of a double bottom. So for the sell trade, either we want to see a push up to 20 EMA, and that is enough to hit your 2 ATR targets. As you can see, the ATR is 3, very low volatility. And from here, if you count from this red candle that pushed lower, it is more than 2 ATR, is 3 ATR till 20 EMA at this point. So from 20 EMA, if you get a rejection and bearish engulfing candle, in that case we will have a sell signal and we will start to look for a double bottom. If we have a double bottom with a rejection from this rejection box and price not breaking and closing below this low, in that case we are still looking at the upside. If we have closed below this low, in that case we are looking at the zone below, which I have mentioned, and we will use the zone above as my trend continuation zone bearish to look for aggressive bearish trades. So a critical level we need to see if we get a push up, rejection. If there is no rejection, if the price is strong enough to push up till 50 EMA, and if forms bearish engulfers, in that case we'll start to look for next bearish trade. If there is no condition here, a price close above 50 EMA, in that case we can start to look for the next bullish trade till the zone above, which I'm going to mark in my next video. So these are the conditions. Now I'll be closely looking at a valid bullish engulfer, or you can also look for a less aggressive traders. You can look for a push up, pullback, rejection at this rejection box, and then a bullish engulfers. 382 candle, the wick can go below, but the candle cannot close below. With that, if we have that, we are good to go long again. If we do not want to enter here, but if you're already in the trade with this bullish candle, then 1 or 2 ATR will be your targets, and then look for the next conditions I've just mentioned. For the less aggressive traders, look for double bottoms on 4 hour, and also look double bottoms on 1 hour time frame with rejection and then a push up. So these are conditions now I'll be looking at. I'll keep a stop loss below if I have a double bottom condition. So these are conditions now I'll be closely looking at for natural gas here on this platform. As we do not have a valid bullish engulfer, you can either wait for a push up, pullback, or double bottom, or you can wait for a price to complete the second bottom, as we had the first bottom here and we have a push down. If you have a second bottom, in that case we have a valid entry condition for double bottom entry pattern. But we have an entry on Awanda. Let's see how it goes. If it pushes up, of course it will push up from here. Again, if we have a rejection at 20 EMA with the bearish engulfers, we're going to take sell trade. If rejection at 50 EMA, bearish engulfers. Wherever I see a bearish engulfer below 50 EMA, I will go short. And if we are not broken below this low, means we are still holding at this support level and price can likely push up. If broken and closed below this low, will immediately start to look for my sell trade and stop looking for buying opportunities. Exactly the same on NEMEX. Look for that conditions I've just mentioned. In case you missed the zone, it is here on NEMEX 1.727 that goes to 1.830. Here on capital.com we are in the zone which is right here 1.819 that goes to 1.907, from where we can get a possible push up if we have conditions. The major zone is right here. I'm looking at for capital.com, and for NEMEX it is right here, which is quite far and big level. If broken below, this is a zone from where we can look for the next reversal. So look for the conditions. Without conditions, if you are entering your trade, you are just wasting your hard-earned money. Price action talks with you. Once the price hit the zone, forms a condition. Let's say we have a bullish engulfers. In that case, the buyers are telling us we have engulfed the sellers, mean we are strong enough that we are going to push the price higher. Now if you see red candle, red candle, red candle, it means we have a seller that keep on pushing down and the selling pressure is strong enough, then we can broke below this zone and then we start to look for the next zone. So that is why conditions talks with us. If the price gives us the conditions, means we have a chance that price will go in our favor. So very important, look for the conditions. Once we have that, we are good to go for our trades. Now we have gold here. Gold is pushing up and down in consolidation and we are about to hit the trend line. A possible chance the price will hit the trend line, form the bullish candle like this, and then price will push up. Again, the anchor levels above, one below, it is 2002.43 that goes up to 2010.99, and the anchor level above 2056.94 that goes to 2062.24, from where we can get a push up and the push down. And if we are broken above this anchor level, only then I'm looking at the major area of value in red, which is 2070.82 that goes up to 2077.04, a major zone below in case of dramatic push down, 1973.05 that goes up to 1987.60, from where we can look for a buy counter trade. If we are in the consolidation within this box, sell is here and buy is from here. So keep an eye. Once we have a conditions, we are good to go for our trades. Here on silver, head and shoulder pattern has been intact and we had a bullish signal, and I'm still expecting a price to push higher from here. I'm still expecting a price to push up at least till my termination zone above, which is 23.31 that goes to 23.52, from where we can get a possible push, a pullback, and then a possible push up. If broken above this termination zone, in that case we'll have a less aggressive way to enter the head and shoulder pattern, and that close will be your entry, and the price will likely push up to the next level, which is right here in red, 24.26 that goes to 24.66, from where we can get a possible push down. So these are the conditions now I'll be looking at. I'm expecting a price to head higher here on silver. Last one, we have crude oil. It's pushing up and price is getting closer to the level of major resistance, which is 78.06. That goes to 79.97. Once the price gets to this level, I want to see a price to form bearish engulfers or double top entry pattern. These are the conditions now I'll be looking at from this area. For now, price is heading higher and we have no entry condition, in case you're wondering. Not a valid bullish condition. We can get a possible push down to 50 EMA. If we get a bullish engulfing pattern, in that case we are good to go long as a pullback entry, which is not one of my favorite entries here on crude oil. But if we have that, we have a pullback entry, and the zone above, we're going to enter our sell trade. If broken above this high, we have a trend continuation, have a likely chance that price will shoot higher to the next level of resistance, which I'm going to mention in my next video. So we have a selling zone here. Once we have a condition, we are good to go short with conditions I've just mentioned. Not taking sell trades until we are here or until we are dramatically broken below 50 and 20 EMA. So that's it for commodities, guys. Hope you're getting value out of my videos and hope you're learning something out of it. If yes, hit the like button for me. Subscribe if you're new so that we can all trade together and trade efficiently. Hope you trade green rest of the week. See you guys in the next video. Have an awesome weekend. Take care.